Hey, it's Michael Sawbut. Everybody calls me Tiny, and this video is The Bull Market Has Begun. Nah, just kidding. Plus my world-famous Super Bowl picks. This is stock market analysis for the week of February 5th, 2018. If you would like to receive intra-week updates from me, go to www.attackthemarkets.com, put in your first name, your best email address, click the Sign Me Up button, then go to the email you used to sign up, and there's my internal storage in case you were interested, and look for the email from me with a link inside of it. Go to that link, click it so it confirms that it was you that actually wants to receive the emails and not somebody that put your name in or these bots that go around the internet. I have no idea what the advantages of these bots going around filling out these forms are. Okay, very good. So let's talk about the market. We'll start talking about Bitcoin. Not going to show a chart here, because Bitcoin did dip under 8,000, I believe. I'm still not watching, I'm not paying complete attention to the cryptos. I have been threatening, mostly to myself, that I'm going to start trading them, but I have not taken the plunge yet. I have been doing some paper trading on them, because I believe that is the first step when you're looking to enter a new market. Do a little paper trading. I don't believe you should paper trade forever, right? A lot of people just fake trade, paper trade, virtual trade, whatever it is, and never really take the plunge. But I'm still wondering if I'm going to decide to trade the crypto cash market or maybe just trade the Bitcoin futures, whatever. But with all the volatility that was setting up this week, I decided, you know what, I'm going to give it at least another week. I am definitely not in a rush. I don't think I'm missing out in the gold rush of my time. I don't believe that. Okay, I believe that if the cryptocurrency market is for real and is going to stick around for a while, there will be plenty of opportunity to get on board. That's what I believe. Okay? All right, so now let's take a look at the market. So, went up to a new high, and then this week we have been falling. A nice down move, pretty decent sized move here for a week, right? It started up at 286 and change and ended down here at 275. All right, but in my opinion, as of right now, this is just another pullback. Yes, it's happening faster than what we have seen previously since rallying, right? Since this rally started here back in 2009. But look, you could see weeks like this happened, a week like that happened. Now, I do not believe that the absolute high is in. Maybe the high tick could be in, but I do believe that we will have another chance, at least another swing up. It may not reach the top. Maybe it forms a lower high. Maybe it forms a matching high. Maybe it forms even a higher high. But I just don't believe that this is how the great bear market, or even the not so great bear market, is going to begin. Yes, Friday definitely knocked some bulls' teeth in. Teeths. I think I said teeths. Some bulls' teeth in. All right. As we headed down to the 20 EMA, this is the red moving average, a much watched moving average by professionals and wannabe professionals alike. Okay, we just ripped right through it. The end of the day, there was still a lot of selling, but they were parading out the perma bulls on the financial networks, and they were saying, it's light volume. We'll see what happens Monday, and I have to agree, right? I'm not a perma bull. I do believe the trend is up, so until that changes, I am bullish. I'm definitely leaning towards the bullish side of things, but I do know that trends have changed in the past, okay? Yes, past results are not indicative of future results. Maybe this doesn't change. Maybe we just go up forever. I just don't think so. I do think that eventually we will have a correction, okay? And yeah, we will have another bear market. I just don't believe it is starting right now. So what am I looking for instead? I am looking for us to come down, more than likely to the 50-day moving average, which is still rising in a pretty fast fashion, okay? And I believe that the 50-day moving average, don't know if it's going to hold it to the tick or get a little wash through, but I believe that will be a pivot. I believe we'll see if the bulls are going to step in there and use that to lean against to once again get long. Okay, so after a day like this, I look for a consolidation day. All right, could there be follow-on selling? Well, back-to-back trend days are rare, but of course they can happen. We were very extended. It's not like I didn't give warning. And yeah, I've been giving warnings the whole way up. So I'm not sitting here trying to say, oh, I told you this was a high. Yeah, I didn't. I actually said that I think we're going to get to 300. Okay, but what have I been saying when we hit the new highs? If you are long, trail your stops up. Continue to trail your stops up. How wide they are, how tight they are, what you're locking in is going to ultimately be your decision, but nothing goes up forever. Now, what if you say, well, I still have my stop down here. Okay, maybe you have your stop under the 50-day. Whatever you're doing, the point is make sure you're protecting your longs if indeed you are long. Because just because I don't think the bear market hasn't started doesn't mean it hasn't. All right, not enough evidence to say it has yet, but on the same note, maybe it's just begun, right? Maybe they just ran it up, got January out of the way, put the January barometer in, which is still an up month, even after Friday, which happened in February, right? It's still an up month for January. So the January barometer is still suggesting that we close the year higher. But let's see what happens. I think we're going to test that 50-day moving average. Here's the Dow, same thing. Here's the Russell. The Russell's already through the 50-day moving average, so we got to look at other levels of potential support, something like this down here at the 150.70 area, 158, where are you? The 150.80 area. We want to watch there. I don't have my glasses on tonight. Mid-caps also at the 50-day moving average. I want to watch this level, the breakout level here at 345.50. Okay, and then the NASDAQ, which acting okay. It's been very strong, so it's been acting. It held up the best on the chart, but again, could make it down to the 50-day moving average. May decide to bounce before then. Get a Fibonacci retracement here. Really need to get my glasses, but I'm too lazy to pause and go get them. All right, so you got this right here. So we're through the 38%. The 50% decline would be right around here at 163.38. In my opinion, 2018 is going to be a lot of back and forth. There's going to be some good swings, but I think overall we are going to remain in a range, and maybe the top of that range has started. We'll see. It's too early, like I said, to really, not enough evidence to really say here. Here's the semiconductors. Watch the 50-day moving average as support. Clot tanker below, or KLA tanker, whatever you want to call it, below the 50-day moving average. 105 is a key number there. Intel, watch the 50-day moving average. NVIDIA, only back to the 20-day moving average, nice and strong. Doesn't mean it can't get more selling, but I just, giggle on this because when this is strong, it's strong. Right? Sometimes it lags the market like we saw over here, but then, the market's getting cracked and NVIDIA went down to the 20 EMA. All right, so banks, watch the 20 EMA too. Banks had not a good day on Friday, but not a lot of nastiness yet either. Right, here's Bank of America. Here's JP Morgan in the spirit of bearish engulfing pattern. Here's Citigroup. How about the broker-dealer? Okay, nasty day below the 20 EMA again, down 2.77%. Here's Goldman Sachs, which popped up, came just shy of 275. Watch the 50-day moving average there. How about the Biotechs? Okay, the Biotechs had been acting okay. They give this little, what I like to call a New York salute. Pulling back here. Watch that 20 EMA. Some stocks there. You got Biogen at the 20 EMA, and then you got Gilead at the 20 EMA as well. Let's look at the glamour stocks. Amazon, big, nice mover that Amazon is. Thanks to earnings. Nice push up. Look at the high right up here. Just shy of 1,500. Wow, talk about a whole number. Looks like it could be due for a rest here. Again, I'm not looking for a short here, but would not be surprised if it pulled back. Here's Apple. which is officially in correction mode. It's down 10% off of its highs. Everybody on CNBC was talking about it. Me, I'm talking about the 200-day moving average. Okay, I want to see what it does. I don't know why that my charts are screwing around like this, but I want to see what it does at the 200-day moving average. Last time it was below that was over a year ago. So does it hold? Does it get some? Does it get the bulls in? Maybe it washes through and then remounts it. All right. How about Alphabet? Here's Alphabet. Nasty gap down. Watch the 50-day moving average. Here's Netflix. Still just in a mild pullback after the big push up. Again, I talked about that last week. I'm not looking to jump in after a big run, waiting for a pullback. So far, we're seeing one here. How about like a Tesla? More consolidating here. What about Caterpillar? Watch the 50-day moving average. This one has been nice and strong. John Deere performing better here so far, right? Just below the 20 EMA, but if it gets going on the pullback, watch the 50-day there as well. How about Microsoft? Okay, Microsoft has also been acting very well. Did not quite make it up to 100. Pulling back, watch the 20 EMA, and then below that, we want to watch that 50-day moving average if it continues to pull back. How about something like Electronic Arts? So Electronic Arts had a nice push up and then a reversal on Wednesday. Right, this is off of earnings, and now it's starting to pull back. So watch the gap here. 50% of the gap comes in around the 120 to 60 area or so, and then you got a full gap fill. How about Activision? In the same vein. So Activision, watch the 20 EMA here, see if that holds as potential support as well. How about bonds? Yeah, bonds getting cracked as the yield is rising. So a lot of people are looking for a bond rally. Instead, it broke this congestion to the downside here. Watch for it to head to these lows down into the 116s area. Watching bonds there. How about gold? A little bit of flight to safety, you would think, but no, gold is also pulling back, as well as the gold miners back under 24. So maybe a little interest over 24, but gave it right back there. Then you got oil acting okay, holding up well, is now in a little power pennant. So I would watch to see if oil can break from this. So let's do the recap. Do not believe the bear market has begun, but we are obviously in a pullback. And so far, it's been pretty brisk thanks to Friday's action, right? Again, not a crash or anything like that, but I do believe that we are going to at least the 50-day moving average. The day after a wide range day, such as we saw Friday, is usually followed by consolidation. So I don't know if we're going to get direct follow through on Monday, but I would still look for lower prices on the short term, see what happens at the 50-day, see if the bulls rotate in and try to get a bounce. I think we're going to get at least one more bounce. Don't know if this last high is going to get taken out. Maybe we'll do a lower high, high, or a matching high. Don't know which one it's going to be. Matching high is the rarest one, right? To exactly a matching high. But I do think that 2018 is going to be the year of the swings. I think there's going to be some nice swings. I think there's going to be a nice range formed, and I think we're going to be able to take advantage of it. Okay, so the Super Bowl picks. Ready? Yeah, I just think that New England is going to be the better prepared team, but I think the Eagles are going to be prepared as well. I think that with the money all coming in on the Eagles, I think there's going to be some late smart money going in on the Patriots. I am not a betting man, and if you look at my Super Bowl record, which is all documented on my videos and emails and stuff, you'll be glad that I'm not. Well, I'm glad I'm not. I don't care. I don't think you'll be glad if I'm not. But anyway, I'm glad I'm not, because I would have got destroyed. Although last year I did have the Patriots, and look what it took for them to win that. But anyway, so I do think that the Patriots are going to cover what I just saw today was 4. But let's all go all the way up to 5. Okay, I think the Patriots are going to cover the 5. I think it's a very important Super Bowl. The coordinators are leaving to take head coaching jobs. This will tie Brady with 6. Well, he has the most all time, but it'll be the most all time. He'll have more than the Steelers, which of course had it over multiple quarterbacks, right? But I think that's a big number for him, and I just think he has something to prove. I think he's saying, you know what? Yeah, I'm up there, right? I'm 40 years old, but I'm gonna show you that I still have it. I think Nick Foles had an incredible game against the Saints. I don't know if he's going to be able to repeat that. I like him. I love the Eagles as a team. I think they have a great defense. But I just think that New England is going to come in and is going to show them what the difference is. An experienced team here. And when it comes down to it, the coach and the quarterback got to lean towards the Patriots. Again, I'm not betting it. By the way, my second pick is over. I believe it's 48. I think it's going to go over. I could see it being a 27-21 game, 28-21 game, something like that. Maybe even 28-24, which means I'll be wrong, but the over will be right, but the side will be wrong. So that's where I'm leaning. I just think that New England is going to be the more prepared, the veteran team. But I think it's going to be an exciting game. I don't think it's going to be a blowout. And that's it. You can write me at tiny@attackthemarkets.com and tell me how nuts I am. I will probably agree with you. You can also razz me about it when I'm wrong, but I mean, you're not going to get far because I'm just going to sit there and watch it with my oldest and try to enjoy it and hope it's a good game. I'm really not putting any money on it. I don't care. I love reading the stupid prop bets, the most ridiculous things ever. And that's it. I'll talk too much about the Super Bowl, probably more about the Super Bowl than the market, right? But anyway, questions, like I said, tiny@attackthemarkets.com. Sign up for the email list to get intra-week updates. Otherwise, I will talk to you in next week's video. Have a great trading week. Stay safe out there. Make sure protective stops are utilized.